So this video is sponsored by Bityard, a crypto exchange with 9 out of 10 stars by the Coin Bureau guy, 400 cryptos to choose from their spot exchange, derivatives that include commodities, forex and traditional markets, as well as inverse perpetual coin futures, USDT perpetual futures and leveraged tokens. You can even set up a copy trading account so people can copy your trades, you earn commission on those trades, or you can follow other traders who have better results than you. Set an account up with a link in the description and get mystery box bonuses for completing random tasks. Bityard. Hello everybody, welcome back to Wrecked City, where things get wrecked and we look at nothing other than potential more pain in the market. So obviously we know Bitcoin's about to change its range, going to a much lower range, with maybe the target area of around 22,300. That's potentially the bottom, but it's going to take a bit of time. Well, maybe not time, but a lot more pain to get there. That's 18% from where we are right now, and obviously altcoins will feel the pain. Generally speaking, a bit more than that. So we're about to enter into this new range, maybe immediately. I think next week, maybe even as early as tomorrow, we'll start to see that. So the beauty of crypto and obviously Bitcoin is that it trades over a 24-hour period. You know, there's no let up. It's 7 days a week, 24 hours a day. No time off, which is why we age so gracefully in this market. But for traditional markets, it's not the same. Obviously, it's almost like a 9 to 5 with weekends off and bank holidays, all kinds of stuff. And it's for them to do, you know, those guys will go off and they'll do their cocaine and their prostitutes, and maybe they'll end the week on a laying down on a tube station train track, you know, because it's all got a bit too much. There's all kinds of things they can do in their spare time. But yeah. One thing that they most likely are doing in their spare time is looking at the demise over the weekend of crypto. Not even a single buyer has stepped in really to help prop up this market. We're looking at a close on a weekly now on spot positions of almost as low as the previous week. We'll see where it goes. So it's not obviously closed yet, but it's not looking good. And so if I was in traditional markets, I would be thinking, right, well, this is an indicator in itself as to what's going to happen to us. If we're going to go down any further, we're going to have to think about what that means for everything. So let's have a little look. So this is your Nasdaq over here. Nasdaq not looking too bad, about to approach your monthly Bollinger Band and also a significant level of resistance around here, around 11,000, with a 50 exponential on the monthly as well. So there's a lot of support around here. Again, we're talking smaller moves, but it's still quite large when you're thinking about the size of Nasdaq's move. So a 7.5% move potentially down there. Fair enough. Okay. So what is the Nasdaq? So the Nasdaq's obviously a collection of the best and biggest market cap tech stocks, right? So we've got all kinds of stuff in there. But the main behemoths, the top three being Amazon, Microsoft and Apple. So let's have a look at those individually. How are they standing up? Right, they're all at, well, more or less all at significant support. This is Apple, the biggest tech stock within the Nasdaq, and it's at support right now. There is a chance that we bounce from here, but the chances are we probably don't. And if we don't, we come collapsing all the way down to this level to 16% pullback, all right? 16%, that's a massive, massive drop for something like Apple, and that will correspond to the price of the Nasdaq. We're thinking that the Nasdaq can hold at that area of what, 7.5%? Seems relatively unlikely. If the big bad boy from the top of the chain comes down to the tune of 16.5%, that's going to drag the Nasdaq down more than 7.5 just by association. I mean, it's not really possible to imagine it sustain the at 7.5. We're looking for a lot deeper. So if that's the case for Apple and that's where it's going to go, or that's where it looks like it wants to go, so 114 for a share there, well, that's going to transfer into the price of crypto, because we all know that Nasdaq and crypto are being traded almost as you know, Siamese twins at the moment. They are very much intertwined. Well, whatever one does, the other does, or the other does, the other one does. So it looks to me like the pain is about to step up a gear. Right, as we got the new CPI report only last week and it didn't turn out to be good, that means we have to wait a whole new month for any favourable information to come out. And you know, that video I made about inflation the other day and charting it solely on energy prices, which is the main one of the main things that is going into the price of the CPI at the moment, the inflation data. Doesn't look like oil's going to come down anytime soon. In fact, it might look like it actually is going to blow its top off and go up higher. So it doesn't look good. So we can think about inflation based on the price of oil. So I made a whole video on that anyway. Doesn't look good. CPI likely to continue staying high and maybe even go higher maybe. So that's not good. nor is this good. So we're looking for a 16, almost 17% drop for Apple. Let's have a look at Microsoft. How are you doing? Alright, so Microsoft at support already, more or less, hanging around this particular level. It's not that strong, but we are on it right now. We could bounce from here, or we could drop to the tune of 10, almost 11% to our next major level of support. Alright, so that's $225, fair enough. Okay, 10% opposed to the Nasdaq 7.5% and Apple 16%. Fair enough. Right, so that outperforms the downside to what we're expecting for Nasdaq, as does Apple. Let's have a look at Amazon. Amazon, right, we've got my indicators on here. We can already see here on the weekly it's looking like wrecked city, a massive rejection from your 200 exponential there. Not a good look. So let's turn off all this noise and we'll have a look at where this is likely to go down to. We've got a few supports. We've got one here we've already reached, likely to come down, test that, see where we go. If that breaks, I would make the case that this would be the next level, really. It looks pretty obvious to me. Obviously, all these are going to correspond to fibs, so let's just think about what this is. So that is a 6.5%. This is an amazing 26, almost 27% drop to its next major level of support. So if we put all of those into one big gap, so we've got 16%, well, we've got 10%, we've got 27%. So let's say on an average, we're looking at an average of around about 20% of the top players of the Nasdaq. Never mind what the smaller ones are going to do. So we'll think about that as playing out as an average of a 20% drop. That does bring us down to this major level of support, the one that I've been waiting for to jump in on for my pension and my future. I want a position in the Nasdaq, but I want it to be reasonable. I would like the idea of it holding here, but I don't think it's going to, not the way that I can see it right now. I think a capitulation is going to be caused not by news or anything like that, but by these big three breaking down to the tune of whatever it is that we've just discussed, with an average of around about 20%. That will bring us to our pre-pandemic highs. So all of that, all of the glory days that were felt after the money printers had turned on, effectively brought back to square one again, just like it never happened, and see where we go from there. I think at that point, at that stage, it would be stupid, really, for the Fed to continue to be so hawkish and say, right, well, it is what it is. We're going to drive this down, because this would basically mean that everything that took place throughout the pandemic was pointless. And although it was not pointless, obviously it's made us a lot of money. It's made a lot of other people a lot more money. But it's rendered the whole practice kind of silly. You can blame Russia and you can blame China for a degree, quite a large extent of the CPI figures and inflation. There's blame all around, right? So it's not as easy as saying it wasn't them, it was them. I know that obviously governments are going to point to them, but they should also point to themselves. Everybody's to blame. All the major scenarios that have played out since that moment where the pandemic struck, it's everybody messed up. I mean, it was good while it lasted, but everybody messed up. So what I'm saying is that when we do get, if and when, and most likely when we do get down to this level, so we're talking about 9,500 pre-pandemic high for Nasdaq, that's going to be where the Fed are going to have to, crawl out of their cave and say, all right, enough's enough. Just get used to inflation. It's the fault of Russia. It's the fault of China. Yeah, we did our best, but we're just going to have to live with it, all right? We're just going to have to suck it up. We're just going to have to live with it. Markets cannot go down any further, and we will try our hardest to maintain markets above this general level. Now, it doesn't mean that it'll work. It doesn't mean it'll work at all, but it means that they're likely to change their direction, because they realise that, what are they going to do? They can't tank the markets and allow for inflation to continue up at the same time. It's going to continue to go up at the same time. But look, we've had fuel prices go up effectively 100%, and we're in summer. Like, it's going to get worse. It'll remain high. It's going to stay high. Markets, inflation, it's all a massive problem. So I would imagine that we do come crashing down to this to the tune of that. So that's a 20% there for Nasdaq, and where I think that the general direction will be changed by the big players above. Now, on top of that, obviously we'll think about what crypto can do. This could cause a much bigger wick for crypto than this level, which is again less than 20%. So we are looking for wicks. ideally, to be picked up at these lower levels. And if that is the case, that could be the equivalent of one of these wicks. Now, I'm not saying it's going to be that size. I'm just saying that it'll be an extortionate wick with extortionate lows that could basically end up being the best buys ever. So if there was a time to maybe even think about buying your favorite altcoin, it could be at some point next week or the week after when we get that, because I think it will mark a significant turnaround in Federal Reserve monetary policy, as well as the direction of general charts. Might not work. It might not work, but it could be the wick we're looking for. So this is the target for Bitcoin, generally, 22,000, but that's only a target based on TA. It's not target based on emotions. There's no real way to gauge the fear in the market outside of the fear ingredient index, and we already know that it's fearful to the max. So we are looking for a significant move down for Bitcoin and crypto, and it's at that point where the low could be seriously put in. Way in advance, and we actually do find ourselves having a springboard effect. I'm not saying we're going to go straight up to an all-time high, but it could mark the absolute low, a low that doesn't get met ever again. But it's all heavily speculative. I'm trying to move a few things together here to come out with one outcome. It's only one of a few. But it's definitely one worth thinking about, given what we've just looked at with traditional markets. So it's not the be all and end all. I do also, if we don't see that take place, if we see a little bit of upside in the, because we are at major supports for these, big tech stocks, if we do see a bit of upside, or maybe a fair bit of upside from those levels, because they are supports, they've not broken yet. If we do see that, then yeah, I think we'll see some upside with crypto, and I think we'll see some decent upside for altcoins in the short term, like I explained in that video of why I bought some altcoins only yesterday and today. So, like I say, don't be all in, never be all out. No one knows the exact direction. We do prefer further downside, but we are getting closer and closer to a low, whether it's a capitulation dump low or if it's a continuation dump into September, October, November, where the cycle low is likely to be put in due to the 4-year cycle. From peak to peak, it's usually a year, give or take, and we'll be measuring that off and marking it off around these levels. That's if we measured the price peak, never mind the market cap peak, which was here, or the volume peak, which is around here. It depends. Like I say, there's no one answer. You have to have a variety of different strategies, and you've got to think in all kinds of different ways to try and make the most of all these markets. No one knows the exact outcome, and that's the beauty of trading. It allows you to think sometimes outside of the box as well as inside of the box. The charts are inside the box. Outside of the box is the bigger picture of economy and Federal Reserve monetary policy and geopolitical events and viruses, coming through your letterbox, all of this sort of stuff. The idea is to try and screw it all together and make some kind of decision out of this wealth of information that generally is very difficult to bind together. So I'm going to put it to you now that is a very realistic possibility. Nasdaq coming down very quickly, very fast, to the tune of about 20%, and then the knock-on effect will be the Fed making the decision that markets are more important than inflation, and to try and prop them up again, despite the repercussions being devastating across the board. It's not a good look. I have to say, it's not a good look, but it's most likely be the situation that we would get if we do see a dump like that, and that would be capitulation in crypto, as it would most likely be capitulation in stocks. And again, 20% doesn't sound much, but that's 20% from this point now. And you can only imagine what the smaller stocks would be like. Absolute wrecked city. They would almost all be worthy of being bought as well. Like I say, even if it were just for a month or two period, for the bounce that would ensue. The economy, the markets, they're all wrecked. Like I say, this is a bear market that everyone is feeling, no matter where they've decided to put their money. It's all the same, and it's likely to continue, whether it be quick dump down or a prolonged drawdown. But there will be a change in monetary policy, because we all know that money is more important in the form of green and red candles than it is in the form of prices of bread and whatever. Inflation will resolve itself as soon as geopolitical events also resolve, but it's going to be a painful year, and I imagine it to continue to be painful. but it's always good to consider the worst case scenario. This isn't the worst case scenario, by the way, but it's a scenario that would go outside of the cycle low, which is due to be around, you know, October, November kind of area. Right, I'll leave it with you there. Don't panic. Don't jump on any train tracks. It's all good. Lower prices are good, okay? And so if you try and take advantage of them as and when they come, and not flap around and panic when they do arrive, because they are good. They are good things. They're daunting, they're scary, but they are actually pretty tasty as well. Anyway, thanks for watching. Hope you have a nice day. Take it easy.